Imagine waking up tomorrow with $10 million. No financial stress, no checking your balance before buying groceries. The surprising truth is that almost every millionaire living that reality today started with exactly what you have right now: zero. They lacked trust funds, they didn't hit the lottery, no magical investments. Millions stay trapped paycheck to paycheck because of a structural trap built into the working class. They sell their time for money. Every job has a built-in ceiling. There are only 24 hours in a day. Even at $100 an hour, the clock strictly caps your total earning potential. Trading time for money is a mathematically limited system. A paycheck alone cannot generate true wealth. We see the flaw in this system at every level. Professional athletes and celebrities frequently go bankrupt despite making millions of dollars every single year. Meanwhile, teachers, engineers, and small business owners quietly retire as multimillionaires. These outcomes reveal a core financial principle. Wealth is determined strictly by what you keep. Consider two financial paths. On the left, someone earns $250,000 a year, but spends $260,000. They lose money. On the right, someone earns $70,000, but invests $20,000 every year. The second person becomes wealthy. High income creates the initial opportunity. Investing is the mechanism that actually creates wealth. This process relies on mathematical certainty rather than high salaries. A consistent contribution of $500 a month can guarantee $1 million net worth. The process follows a four-step cycle: earn, save, invest, repeat. While most people spend everything after step one, the wealthy repeat the entire cycle for decades. This graph charts the exact trajectory. $500 a month invested at an average 10% annual return over 30 years crosses the $1 million threshold. Achieving that return requires buying income-producing assets, such as stocks, real estate, or digital products. These assets break the 24-hour time limit. Think of a single investment as a tree that yields fruit every year. Eventually, an entire orchard works while you sleep, generating income whether you clock in or not. Investing functions as an automated machine, replacing physical labor with capital. An average earner must find $500 a month to fuel this compounding engine. While social media associates wealth with luxury goods, real-world wealth usually looks boring. The average millionaire drives an ordinary car and lives well below their means. They avoid the wealth killers that drain investment fuel: lifestyle inflation, impulse buying, and high-interest debt. This timeline illustrates the exact opportunity cost of those wealth killers. This single $1,000 block represents an unnecessary purchase made at year zero. At a 10% return over 30 years, that single $1,000 purchase removes $17,000 from your future net worth. Reallocating $500 to your future self is a high-yield mathematical choice. Consistently repeating this cycle transforms a single paycheck into multiple independent streams of income. Relying on a single salary is like a table balancing on one leg. Minimal pressure can knock it over. Wealthy people add pillars of dividends, rentals, and businesses. With 6 pillars, the structure locks in. If a paycheck disappears, the table holds firm. This system builds total, unbreakable resilience against financial disaster. The math moves slowest at the start. The first $100,000 takes the longest, because your personal contributions are doing all the heavy lifting before the compounding takes over. Once you cross that threshold, compounding interest triggers a tipping point. The math catches its own momentum and begins to outpace your manual labor. Eventually, your invested money earns more annually than you do at your job. Reaching that point requires thinking in decades. You prioritize cultivation today to ensure a harvest tomorrow. Time is the most powerful multiplier in the compounding equation. The earlier you start, the harder your money works. The second best day to begin is today.